What's going on YouTube? J Clem here, back with another banger. And in today's video, we are going to be going over how to scalp and specifically scalping in ranges. So I've got a few questions on the left side of my screen here that we need to obviously run through and understand before we get into the video. So question number one, what is a range? How do we define a range? So simply, a range is a consolidation, right? So when we have price that's ranging, right, like this, it's consolidating. There's no defined and clear trend like this, right? We are ranging, we have a high, we have a low, and prices contained within, right? That's a range. Now, how do we trade these ranges is very simple. We'll use a tool, a special tool that I'll get to in a moment. But first, we have another question. So we've gone through what is a range, how to define and draw a range. So we define a range when the market is not trending. So like I just said there, where we have a series of highs and lows, usually you'll find is that they do like take each other, like you'll take a high, then you'll take a low, then you might come in, then you'll take a low, then you'll take a high, sort of like this, right? So there's no clear defined trend. And how do we draw a range? Simply, we'll use a tool called a GAN box, and we'll draw it from the highest point to the lowest point, something like this, right? And the settings for my GAN box are this. You want to do 0, 0.3, 0.7, and 1. Now, I usually like to have the background off, but for the sake of this video, I will put the background on just to make it a little bit more easier for the eyes to see. So this is how we draw our range, right? From the highest point to the lowest point. Now, we also have, what's going on? One more question to get into first, which is tools to use, which you've already gone over. It's the GAN box. It looks like this. You can find it in this part of your chart tooling area, GAN box, right? You can also use a fib, but I prefer the GAN box. So yeah, up to you. Now we've defined that, let's get into the actual video and into some price action. So as you can see on my chart, right, I've got up here order flow is king. Now I like to trade order flow. It's how I trade. Order flow is how you like clearly define like the trending markets. You can see, like here, for example, is clear order flow, right? You see the price just respecting the lows and obviously taking the highs. However, we do have points in the market where we do not trend, where there's no clear defined order flow, as you can see in this section of the market, right? We just have sort of messy price action, taking the lows, taking the highs, right? Ranging. And there's actually a really simple way to trade this type of market. So what I've done is I've got my GAN box, right? And I've drawn it from the highest point of the range to the lowest point of the range, right? And what you want to do after you've defined your range, and let me just get into this quickly. This does work on any time frame specifically, but obviously for scalping, you're going to want to use the 5M or the 15M, right? I prefer the 15M. I feel that it's slow enough, right, to keep you. It's slow enough to so that you're not. You don't need to think too fast, right? You can break down the price in a reasonable fashion without obviously being too fast. Whereas if you're going to use it on something like the 1M, price is going to be moving super fast. You might miss some information. You take a sell, but price just buys, right? So the 5M is also good, but I just prefer the 15M. Like I said, it's slow enough that you can really understand and you've got time to work out what's happening, and it's also fast enough that you can get a couple of trades a day using this specific strategy. So first of all, like I said, define your range, define your high, define your low, right? And then you want to use the 30% and 70% mark, right? So up here, right, we have our higher 30%, and here we have our lower 70%, right? And what this means is obviously from the high to the low, this is 100%, right? This is the 100% of your range, right? The 50%, which is here, right? Stay away. You do not want to trade in this area, right? Just imagine that this is not here, right? This is where you will get royally fucked, right? Do not trade in the 50%, right? Very, 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 very important. So once you have defined that, you've defined your range, you've defined your area not to trade. Clearly, the 50%, right, between here and between here, you will not trade. And obviously, you've defined your lower 70% and higher 30% of the range. That's great. So what you want to do now is wait for price to come into that higher 30% and sell and target the lower 30%, right? So this is always your take profits, right? These regions. And you can see, right, price comes in, right, and we sell off. As soon as we tap the bottom, right, we get a buy. Yeah, so maybe you miss your take profit here, but that's fine. You come back down, you get another entry, you scale in, and you take profit up here, right? Now we give obviously some confirmation and we sell back down to that lower 70% where you can buy again up to the higher 30% where you take a sell and maybe it misses your take profit and you take one loss, you know. So in this whole range, you've only taken one loss, but you've had, you know, what's that, 6, 7, 8 take profits. So that's absolutely great. Then obviously, when you do eventually break out of that range, this is then, you know, started a trending market. You can wait for that pullback and you can take it long, right? But obviously this isn't part of the range, right? We've broken out of that range already. It's a very, very simple process, right? You sell up here and you buy down here. It's always the same. Sell here, buy here, sell here, buy here, sell here, buy here, right? I've got another couple of examples I can show you, right? Here, and it works every single time. You can use this on any pair. Any market, to be honest. I like Euro USD and GBP USD. I feel it works great on these pairs, but again, right, so we've defined our range, we have our high, we have our low, right? In the 30% we sell, right? In the 70% we buy, we sell, right? We buy, we sell, right? We come down, we buy, we sell, right? And then obviously you'd be holding this sell and, you know, look at that trade that you get into. You were trading a ranging market, but then you obviously got into a trending market because of that, and you've just made 150 bips, right? Lovely, lovely, lovely risk to reward in, you know, this strategy. Very, very simple. I think I have another example that we can go over. Yeah, look at this. Look at how big this range is, right? You've defined your high. There we go, right. You've defined your high, the highest point of the range, and you've defined your low, the lowest point of the range, right? You buy down here, target up here. You sell here, come down, you buy, right? You touch down again, you buy, you sell up here, buy here, sell here, buy here, sell here, buy here, right? You take profit, right? You sell again, right? You buy, right? And then you sell again. Very, very simple. This just works because obviously when we are in ranges, it's, you know, there's no clear defined order flow, right? The order flow looks something like this, right? You can see obviously the money moving, right, around the market, up and down the market. This is order flow, right? Very easy to trade order flow. However, when you're in ranging markets, you know, there's no clear defined order flow, right? Price is all over the place. This is just obviously, you know, the banks and the institutions, they're stacking their orders, they're preparing for obviously a big, big move in the market. Because obviously, you know, these guys they're trading with billions and billions of dollars, right? So these take time to fill these orders. So when price is moving in these ranging markets, we can know that obviously they're gonna be there, you know, for at least a couple of days or so. Like this is, let's see, this range was 6 days, 6 days and 4 hours long, almost 7 days this range, right? And look how many trades you get. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, sell again, 17. right? You get 17 trades, all winners. So that's plus positive 17 trades, right, in 6 days. That's like more than 2 trades a day. Absolutely brilliant. You can use this over and over again. It always works when you define obviously your true range. Just make sure that you do mark it from obviously the highest point of the range to that lowest point. And so long as that you've drawn your range correctly, you can clearly see how price does respect obviously the 30 and 70% marks and gives you, loads of trades over and over again. So that's it for now. If you've got any questions whatsoever, at me in the comments and I will get back to you. Hit that subscribe button for more videos like this. And yeah, enjoy the rest of your day, gang.